Trump says US to help free up ships in Strait of Hormuz starting Monday. The leverage shift starts now. Here is the signal that separates noise from actionable change. We will map trigger, incentive shift, and downstream impact before the close. Trump just announced the US will help free up ships stuck in the Strait of Hormuz starting Monday morning. On the surface, this sounds like a geopolitical move. But here's what most people are missing. This has immediate, concrete consequences for AI infrastructure, data center expansion, and the supply chains that power the next generation of compute. Let's start with why this matters right now. The Strait of Hormuz handles roughly 30% of the world's maritime trade. When ships get blocked or delayed there, you're not just looking at slower delivery times. You're looking at inflation in shipping costs, supply chain congestion, and critical bottlenecks for the exact materials and components that data centers depend on. Think about what goes into building the infrastructure for AI systems. You need semiconductors, most of which transit through that strait. You need rare earth materials. You need optical fiber, power systems, cooling equipment, and specialized hardware. When those supply chains are constrained, one of two things happens: either delivery windows extend, or costs spike. Either way, the companies racing to build AI infrastructure, OpenAI, Google, Meta, Anthropic, and every startup trying to compete, they're all watching this closely. Here's the second-order effect. Data center build-out is already running into supply constraints. If Trump's intervention actually clears that strait and gets shipping moving again, you're looking at lower input costs and faster deployment timelines for the companies with capital to move fast. That's a structural advantage for the incumbents. Smaller players who were already struggling with margins? That pressure intensifies. But there's a contrarian angle here worth considering. Geopolitical interventions in shipping lanes don't always stabilize markets in the way governments intend. There's still risk of escalation, counterresponse, or unintended consequences that could swing shipping rates the other direction. The market will price this into insurance premiums and contract rates within hours. So the real question isn't whether the strait clears, it's whether the market's current pricing already reflects this outcome, or whether there's a discontinuity when the announcement becomes operational reality on Monday. For India specifically, this matters in two ways. First, Indian companies dependent on semiconductor imports and data center equipment sourcing benefit from lower shipping costs and faster lead times. Second, India's own data center expansion plans, whether through government initiatives or private players like Reliance or Tata, become cheaper and faster to execute if supply chains unblock. That's a competitive advantage for India's emerging AI infrastructure play. For global markets, the immediate implications are: watch semiconductor stocks on Monday for a relief rally if the announcement is credible. Watch shipping indices for a potential contraction as risk premiums come out of insurance and charter rates. Watch energy stocks, because a cleared Hormuz also means easier oil transit, which could put pressure on crude prices if markets reprice the geopolitical risk. The deeper strategic question is whether this intervention signals a broader shift toward using US military force to guarantee critical supply chains. If so, that's a story about the militarization of economic infrastructure, the de-risking of energy and semiconductor supply, and the realignment of global trade routes around US security guarantees. That's not a one-day story. That's a structural reset. So here's what to monitor starting Monday. First, real-time shipping data and delays in the strait. Second, oil and gas price movements. If prices drop materially, the market is pricing in sustained access. Third, semiconductor and hardware. Component pricing. Watch for a lag in cost relief hitting the market, because supply chain effects take weeks to materialize. Fourth, earnings calls and guidance from companies with heavy data center build-out plans. They'll signal whether they're pulling forward timelines or adjusting capex based on this signal. The most important thing to watch, though, is whether this actually clears the strait or whether it becomes a rhetorical intervention that doesn't materially change the underlying geopolitical tensions. The credibility of this announcement will be tested within 48 to 72 hours. If ships start moving and delays clear, you're looking at a genuine structural shift in global supply chain risk. If not, you're looking at political messaging without real operational change. For investors, creators, and anyone building in the AI space, this is a reminder that infrastructure doesn't exist in a vacuum.